Trading isn't easy, but why does it feel so complicated for so many people? One of the main things is it's very, very complicated when you don't know exactly what you're looking at and exactly what you're focusing on. So once you understand these things and you know what actually matters, you can get rid of everything else. Get rid of all the noises in your head, all right? And then trading gets a lot more simple. And that's what we're going to cover in this video. If you're new to the channel, my name is James Strong. I make videos about trading the futures market, investing in the stock market, and personal finances. We trade to grow our capital. We invest to build long-term wealth and have asset appreciation. And none that's possible or can happen without having good personal finances. So remember, we don't trade or invest. We trade and invest. With trading is not hard. What makes trading hard? When I say that, let me explain what I mean, right? What makes trading hard is the psychological aspect. Trading is one of the things where you have to master yourself. And this is why a lot of times naturally in life, I'm a martial artist. So I love doing things that you have to master yourself. Now, you never really master yourself, but that's the journey. It's like with trading, you can't master yourself. You can't master your psychology. But the journey of going to master yourself is what makes it, that's what makes the reward. Seeing yourself not be that good and get better and better, and seeing yourself not understand what, this trend line break is, or what support is, resistance, or where there's liquidity in the market, where is there an imbalance in the market, not understanding these things, and then getting better and be like, yo, I understand what that means now. They're talking about liquidity on the news. Yo, I know what that means. That journey, just like fitness, losing weight, martial arts, that is what it's about. So that's why it's hard. But trading, the number one thing that is hard to master is the psychology. So the first thing we're going to cover is psychology, man. Emotions are going to drive many bad decisions if you let them run rapid. Like, we need to be able to control fear and greed and all types of things. And there's more than just fear and greed. You'll hear people say fear and greed, but like there's fear of missing out. There's fear of loss. Some people have a fear of success. And if you don't understand what that is, I would encourage you to study a lot more with your psychology. I put into my psychology for the first 18 months heavy when I started trading. Because like I said, y'all know I'm a businessman. So I got into business first. I know how things work and how people fail. The first time I do with any business, I learn how the people fail. I don't study how people win. That's not hard, right? So, go to my description. I got books there. I got my top 3 books that help me in my journey. Click the books, get the books, read the books. Read them. If you don't like to read, too bad. Read the damn book. It's going to help you out a lot. Hold on, let me change that. If you want to be successful. I'm talking to the few people who really want to make a change, who really want to change their life. So again, if that's you, you know who I'm talking to. And if it's not, disregard it. But you want to get results. You don't want to keep doing the same thing, getting the same result. So if you want a different result, we have to do different things. So sometimes understand what you're saying. When you're saying, hey, I don't want to read, or I don't like to read, that may be why you're in the situation you're in. You feel me? So just love from you, man. We family. You know what I'm saying? You tapped in, just understand that, right? But we need to learn to get this fear and greed in check. Now, I say in check. We cannot control it. People like to say control it, or some people will try to tell you to trade without emotions. We are human beings. We cannot trade without emotion. That is impossible. We're not robots. You can't program us like AI. But we can control how we react to our emotions. You feel me? So I'm not going to get into this is not just a psychology video, but this is the first point we're going to touch. The biggest one is trading psychology. We can control how we react to it. I still have emotions in the market. I have times where I get truly pissed off at the market. You know what I'm saying? I get pissed off at a move. I'm like, bro, everything looked clean. What happened? Or sometimes I'm like, man, that was a lot more on that move. I got out for a 3 or 4 to 1. Dang, there's a lot of meat left on that bone. And it's like it is what it is. So we can control how we react to it by doing certain things. But just remember, man, discipline is your best friend, not emotions, because that's what's going to help you get your winners. Okay. Second point, understand the market moves in cycles. And yes, the market moves 3 directions. It moves up, down, and sideways. We all know this. But the thing that I want to make sure I get across that a lot of people say is they love saying the trend is your friend and all these things. That's not necessarily true. It's not about the trend being your friend. I trade against the trend all the time and make money. So it's not about what the overall trend is doing. That's why we can make money all 3 ways, but understand that the market is going to move in 3 directions. So understand if we are in consolidation, know that we're in consolidation. Like, understand that. Like, I call that on my story on Instagram. If you're not following me on Instagram, go on Instagram and follow my story. I will follow me, and then I post stories like that. I literally had called one morning. I was like, yo, we're in a lot of consolidation right now. What that means is we're going to have a strong push. Be on the lookout. Give it less than 24 hours. I even had one of my partners hit me up and ask me that, and he said he lost 2 times. I'm like, yeah, I didn't take a trade because I'm waiting for the move. And then I hit him back like 6 hours later. It was like 11:30. I said, hey, look at NASDAQ. Boom, we just had that strong push to the downside. I literally just said that a couple hours ago. So when you understand that, I was able to stay out of the market and not take an L because I'm like, yo, we consolidating. Now, I'm not saying you can avoid every single loss. That's part of the game. But when you understand that, okay, I know where we're in, do you have a strategy that can capitalize on consolidating markets or on bearish or bullish markets? If you do, great. Now you know how to respond to it. But if you don't, sit your happy butt out. You know what I mean? Sit still, save your money, live to fight another day, right? So stop fighting the market and start riding with it. You feel me? Like, start riding with the market and understand what's going to come from it. And, just understand the market's always right. Like, people say it and they'll say these quotes, but like really understand, like, yo, the market's going to do what it wants to do. So don't try to make yourself seem like, hey, I think this is happening. No. What is the market telling you it's doing? That's what's going on. You know what I'm saying? So if you need help with this, make sure you go to my description below. Just a heads up for you guys, I do have a training coming out and some more new resources. So I'm going to be getting rid of my old ones. I'm going to actually be adding in new ones. So one of them is going to be available to subscribers only. One of them is going to be I'm going to have a wait list for it. So make sure you go to my description. I may have it by the time I drop this video. I may not. But as always, man, I got to tell y'all, check my description every video because I have new things for you. And go get them books, man. Go get them books and read it. $15 can change your life forever. I have probably $1,000+ worth of books on my bookshelf. It's worth it. You know what I'm saying? They done made me tens of thousands, not $100,000+. So get the daggone books. Next point. We want to have a clear strategy. Now we're starting to get more into the technical, right? We need a clear strategy. When I say clear, I mean clear. And this is something, again, I've helped a few people privately. I've had more people ask me. I may begin to help people publicly with this. Don't know yet. Like I said, man, stay on my list. Just stay in touch with me, man. Follow me on Instagram and be on my email list below. Just always check my description. But people don't have a clear strategy. A lot of times they do. When I say clear, it needs to be clear cut, mechanical. Like before I get in every trade, I know where I'm getting in, where I'm getting out, how much I'm risking, like everything to the T. And there should not be any type of biasness or subjectivity into your trades. Can you trade like that and make money? You can. Can you do it and make money consistently? It's rare. So there's a difference between somebody doing that and they're trying to tell you they're the best trader in the world. They're trying to act like they're some guru. I don't put on for anybody. I'm just me. Like, again, I'm not a millionaire yet, but I'm doing well. And I also don't take the biggest trades, but I don't take the smallest at all either. You know what I mean? Like, my average trade, I like to risk is like, basically I like to keep it under 1,000, but I have to risk at least 250. Like, if I don't risk more than 250, I really don't care about the trade. The money's too small to me. I don't care, and I start getting reckless. So I'm around that range right now. I'm not risking 10,000, 20,000 a trade, but I'm also not risking $20. Just being honest, I don't care about $20 trades, right? But back to it, we need to have a clear strategy that is tested, which means we have all our data. We have data in different market cycles, in different quarters of the market, in different when different economic factors are coming around, when different fundamental analysis and news are happening. We need to have this thing vetted, and most people don't. What they'll do is test it for 1 month or 2 weeks or see a few trades and start trading it. And there's so many different things in that. So again, I'm not touching specifically on any one of these because these are not very simple, like 5 minute, 10 minute, even like a 30 minute. This ain't even a 30-minute conversation I can have on one subject, but I'm letting y'all get the meat of all this stuff, man. I'm spending the most time on the top 3 and we're going to go through the rest. But these 3, right? The first one, mastering your psychology. The last one, understanding your market cycles. And then this one right here, which is having a clear strategy. Everything I'm covering is about having a strategy. So like the point of these videos is not just listening to me talk and then like be motivated and inspired. Nah, take notes. Like I'm really teaching y'all and giving y'all advice and coaching y'all right now. You know what I'm saying? Now I'm going to do more to help people out for sure. But like, take this advice. This is real advice from somebody who's really wanting to see people win. Like, you know what I mean? It's dope to be around people and we all can win together. There's plenty of money in these markets, man. There's plenty of money. And your definition of winning is different. It's not the same as everybody else. You feel me? So you don't got to be a millionaire if you don't want that. You can make an extra $1,000 a month. I mean, $5,000 a month, whatever you want, 10,000, 50,000, and that's for you. You feel me? So, but we have to have a clear-cut strategy because random trades get random results. All right. There's a time to adapt. There's also a time when you got to realize you just jumping in and trying to catch a trade, which comes back to the psychology piece. So a lot of these are linked together. You feel me? So let's get that strategy right. Once we have the strategy, we need to have risk management. Having good risk management is non-negotiable. Just to give y'all some tips, man, like always set your limits. I told you, I know where I'm getting in, where I'm getting out, what I'm limiting every time. Always set your limits before the trade. This is one less thing you have to think about while you're in a trade, because as humans, we psychologically, I told you, I studied human psychology for a long time. We don't have but so much decision-making ability in a day. And a lot of times when we're trading, it actually will use it up. So think about like a gas tank in a car. It's going to use up a lot of our fuel and our energy during that first little bit of the day, especially to lower the time frame. You know what I'm saying? There's nothing wrong with that. Like I trade off the 1 hour, I trade off the 5 minute. It depends on what strategy I'm using for my playbook or where I'm at in my life at that moment. You know what I mean? So if I don't want to trade as often, I'm just going to be on an hour, 4 hour, might zoom into the 15, take my entries. Sometimes like, I want to trade more frequently. I'm going to do I'm going to go right down to the 5 minute, sometimes the 1 minute, take my entries. But understand that like, you want to know where you're getting in to limit yourself, to limit your risk and your exposure, because this is a business. We are all business people. All of us here on this call right now, I said call, like I'm on my live, folks. All this people right now on this video, we are investors. If you day trade or if you long-term invest, you hear from me with that, or if you're a finance person and you're looking to get investing, we are all investors, whether long-term, like my stock people, or short-term, like my traders. We are all investors. There's just different types of investing. So we need to protect our capital at all costs, right? Money is the bloodline and the lifeline to our businesses. So we are investors. We need to make sure our capital is protected. Now, we don't need to be scared to lose it, but not some, but don't lose it all. You know what I'm saying? Have what I call optimistic paranoia. Like be optimistic, but be a little paranoid of like, all right, like, yo, if this don't work, what would happen to my account? Okay, well, if you only got $1,000 in your account and you're risking $250, don't think about the good that can happen, think about the downside. So have a little patience, be like, you know what? This might be your aggressive account. How about you cap your risk at $100? Because there's a random distribution of trades that could happen and you're going to lose some. You don't know when those losers are going to come. That's the probability of the game. And allow yourself to have, room to win over time. I mean, these are simple but complex but simple topics. All right. So, we need to do that because at the end of the day, you can't make money if you're out the game. Simple as that, brother. Next point. Choose to have quality over quantity. Contrary to what people say as well, a lot of people. You don't need to trade all day to make money, and you do not need to take multiple trades. When I first learned, and I believe it's good for new people, I was taking 6 to 7 trades in a day. I mean, I'm talking within a 4-hour window of New York session. I won't even trade in like London or Asian session or evening time. I'm talking from 7 to 11 a.m. type time. I'm taking 7 trades. Like I was going in when I was first getting started. But I needed that repetition and that time in the market and that time to have emotion, because you can't learn but so much back testing. You can get your strategy tight, but you cannot learn the emotional aspects of how you're going to react. When you get real skin in the game through having an evaluation company or through putting your own money in there and you get emotion behind it because you don't put skin in the game, that's when you're going to see how you really react. And it's like Muhammad Ali. Like I used to box before I got into martial arts, right? So that's my first, technically it's a martial art. So that's my first martial art. I used to study Mike Tyson, Muhammad Ali, all the greats. Muhammad Ali has a quote. He said, he never starts counting repetitions until it starts to hurt. So the same thing with your pockets. Like your learning really doesn't start with trading until you start to experience pain. And most people ain't going to go through that. They're not going to get to that point because they'll quit. But like, just know you start experiencing pain. Now is when you're going to start learning. People don't learn when times are easy. They learn through hard times. That's why the strongest people are created during hard times, when they persevere and they succeed. So quality over quantity. Waiting for the right setup, that's the key. Sometimes that means we don't have a trade today. Depending on how you trade, the higher you go out, right? If you're starting to intraday or swing, like some of my setups, they may not have trade. They might have one trade that week. So you have to understand that too, and just know that over time, though, less is more. So I have some that don't trade as often, but they might do 12. One by itself, right? One strategy by itself might do 12% that month, or I'll say R. risk to reward. It's not percentage because that's based off what you risk. It might do 12 R that month, so 12 times whatever I risk, or it might do 15 R that month. One strategy, one playbook. And it's like, well, what are you risking? But I risk one every time, but I might get three to five back. So I might have 3 quality trades, or let's say I win 3, lose 1, but I'm up 12 or 13 R that month. You know what I'm saying? Like, that's one strategy. You need 2 or 3 of those and you golden. You good. Really one, but I wouldn't rely on one. So quality over quantity is key. You know, and then again, of course, adjust if you like trading more, or if you know you're a person you got to move a lot, you know, adjust, go down the time frames and make quality on a lower time frame so you can get more opportunities. And the last point I'm going to cover is make sure you review, you adjust, and you improve. The market is going to change. Things are going to change. Times of year, like so many things impact the market. What worked literally yesterday may not work tomorrow. And I don't literally mean yesterday and tomorrow, but like just because it worked last year don't mean it worked this year. Now, if it moves similarly, yes, it could work. And that's what we want. We want to look for patterns and trends and indicators. And, you know, again, it's just really patterns of human behaviors. All this stuff is. That's what the candlesticks really represent. It can give you a good indication that, hey, this is kind of a way humans behave over time. And so it should be, you know, long term. But like, if you're just zoomed in too far, you can't really see what's going on, how people react in Q4 versus Q2 earnings reports, or, you know, when interest rates get cut versus when they go up. Like when, you know, when the chairman speaks, like he was speaking a lot this last year versus when he's not saying as much during certain years, or a presidential election cycle. There's so many things that can impact your strategy if you're too zoomed in. So just learn to adjust based off what you learn, and realize like you're always going to be evolving. All right. So this is what makes you better as a trader. It's going to make you better as an investor and just the overall person, man. You're going to continue to grow from this thing. So as always, my resources down in my description below. If you like making money, make sure you subscribe to the channel. If you don't like making money, then don't subscribe. It's that simple. Much love to you.